Welcome to TradeTheMBI.com. This is John's Reports for the 25th of February, and well, we're peaking up right at the 100%. So the Morganacci here, we're going to be moving back up to, well, the original one that was this first step down where we finally came up to it, because we've been having this rising gold from, well, all the way back over here once the rally began, and that was, at the beginning, middle part of January. It's right around the 15th of that, and so here you are, month and a half later, and it's still in progression. This is something I talked about. It was right after the election. We were talking about the prospect of this looking a lot more like a mid-90s chart when Bill Clinton had won, and you started to see the economic growth engine of the U.S. starting to propel itself. What we don't have in this section is what they had was a conservative Congress that was limiting spending, and you were actually creating budget surpluses for the first time. That certainly isn't anything that's on the horizon here. However, with the rising wages and that, we have an inflation situation that is going to start building, and the market's going to price that in. And some people think just because there are lower earnings, blah, 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 that's going to cause the market necessarily to fall. It doesn't necessarily translate that way, simply because you have a devaluation of money, and that has to be made up for in the actual value. So here you can see it's a little even stronger on the shakeout from NASDAQ standpoint. However, we're reaching a culmination point here, because this could give a full cross of green over red, as well as cyan under red and orange dipping below, all the things that would lead to a significant little breakout maneuver, which probably wouldn't last, because what happens with that is you get the slight breakout, moves for a few days, and then comes right back to it. So it's not like you have to worry about, oh, I missed this particular one compared to a different rally. This is also adding support into here to the euro on its little bounce back, though. It's fairly weak, especially now we're starting to roll over right here. We're at 38%, it might even make it up towards the 50, but there are a lot of headwinds going into the euro. Any decline in the euro, though, really poses some problems. This, of course, is going to start to amplify as Brexit comes closer. Everyone thinks that is such a horrible situation for Britain for them to leave, but probably not so, because what is your choice for the EU? You're going to cut them off of your own economic lifeblood just for the fun of it. Doesn't make a whole lot of sense, so it's a lot of talk and bolster about nothing. Gold as a alternative play in there, just from a central bank standpoint, certainly having an impact. Though the Fed discussing its end to quantitative, ending their balance sheet overflows and allowing it to taper down. Probably not going to be the case. Nobody really knows that it's all that significant. I mean, if they just eliminated $1 trillion or $2 out of it just for the fun of it, who knows what the market's reaction has been. Pretty much you're creating fake money to do a lot of whatever you want, so is it really even real? And because it doesn't materialize into the economy, you're not seeing out of control inflation or anything, and so that's their biggest concern, is that a lot of that electronic money that's been created would actually come into the system. Because it's just not possible to do it. So that's not happening, and everything's pretty much chugging along. So unless there's some major upset that no one's expecting, there could even be a bounce from the visit of Trump in North Korea because of peace is breaking out. Of course, you have peace on one side with North Korea, and you have Venezuela heating up at the same time, though Venezuela's not much of a trading partner, so it's not really going to have much impact either way. The idea of stability with China and those trade talks improving, that actually has more significance than anything. But at this particular time, unless there's some major economic change, you've got to expect and be biased to the upside with where price is going. And we can see that there's the 50K continuing its slight ebb to the upside. And that's just because mostly it's cyan has been under red for quite a while throughout this whole little pop. So no shock with any of that. And we'll just keep at it, and I'll keep putting up anything. There really wasn't much from a Friday standpoint. If we look at the intraday, it started up, got a couple of positive streams, filled right back to it, and then made another little series of them for really coming back and filling them. We're just back down at the same spot. No real difference. And then as we approach the after hours market, it took all the way until this later, because this is an interesting one where it kind of came down. You had the spread ratio on your shake-up, but you had no real support yet from the orange, and it took quite a while before it actually broke above the cyan, the green that is. But even though it took a while, like all these bars, it still was only at the 23%. So that tends to happen quite a bit. And then, of course, we got right to the 50, where the orange did plunge below. Red as well as cyan came below there, and that's what also started the rise of gold. And boom, that's led to where we're at, which is at the peak now. We've already had a dip from the move higher for positive extremes, and we're approaching right back to the highs. So looks like we could end up with a decent start to the U.S. Open. So we'll look forward to that. And as always, I will update you on any new developments. Trade well. We'll talk again later.